Yo, what's up, guys? It's Trader X one more time, coming to you from Soweto. Alright, so I've been promising you guys an easy strategy that I actually used. I used to use the strategy when I first started off in trading, right? It requires a bit of some patience, but really it is one of the most easiest strategy you can ever use. I do recommend it for beginners, but like I said, patience is one of the traits that you need to have in trading. And with the strategy, it's no different. I need to also point out, guys, that trading is a risky business, right? And this is not a quick fix strategy. It's not something that's going to make you rich. You will lose some trades, right? It will ultimately depend on your discipline, and on whether you follow the rules, really. Other than that, it's a clear-cut strategy. It's easy to follow, yeah, and it could bring you some good healthy profits, right? So without further ado, let's jump into it real quickly. So right now we're looking at the Euro USD daily chart, right? I just need to mention quickly, with the strategy, what you want to do is you want to start off at the daily chart first. When you start off at the daily chart, what you need to identify here is we're going to be identifying the support and resistance zones. Right now, let me make this black here real quickly. We're going to be identifying the support and resistance zones, and I'll show you and I'll tell you what the reason for that is. Right now, also, just before we proceed, one more time, is if you're well studied on your candlestick formations, right? Candlestick formations, candlestick analysis, this is going to become easy for you. It's going to be easy for you. And also, if you know price action, it's going to be easy for you. Price action basically means support and resistance and the movement of price itself. Really, you need to know how to identify support and resistance. You need to know your candlestick analysis, right? If you don't know that, research, go back to the drawing board, find out, research the ones that commonly come up more often, and those are the ones that you're going to be trading, right? All right, and price action or price structure, those are going to be the most important things with this strategy itself, right? I have a video tutorial that I uploaded on price structure. You might want to go back on that and just take a look at that, right? So let's jump into it real quickly. So with the strategy, first of all, daily chart, what you're going to do at the daily chart is we're going to be identifying support and resistance, right? We're going to be identifying support and resistance, and in this case, there's one. So support and resistance as we go along. So remember, price structure is actually quite important. So we're going to be doing this. Let's do that here real quickly here. And we've got another one here. And then we've got a final one there. All right, so that is our support and resistance lines that we've just identified, right? So the next thing that you want to do here is you're going to insert an indicator. So you're gonna go insert indicators, go down to trend, and then select moving average, right? So when you first open it, it will say 14-day moving average. We're going to change that to 30. MA method, we're going to leave it at simple, not exponential. We're going to leave it at simple. So 30, simple, and then apply to close, right? You can choose any color that tickles your fancy, really. I'm going to make mine a little bit thicker. Click on OK. We're done, right? So just make sure that you can see this moving average on every time frame, right? So it's applied to every time frame. There we go. Go back to our daily. So we're done on our daily now. On our daily, well, we're not really done, but on our daily, we were looking for our support and resistance zones as well as this moving average. All right, so now that we've identified that, also before we proceed, guys, this strategy is a trend following strategy, right? It will not work in sideways markets such as up here. This part here, the strategy will not work when the market is moving sideways, right? So you need to be aware of that. You need to know what your sideways market is or your consolidation areas are. You need to know when the market is trending or when it's ranging, right? It will get you out of a lot of sticky situations. But nonetheless, so this is what we were looking for on the daily chart. Now off the bat, so how the strategy actually works here is, right, there is a few things that you need to follow, a few things that you need to know before you can actually take your positions, right? And this is all based on the daily chart. So we're going to be following the daily chart. First of all, I'm going to put ticks here. First of all, price needs to move below the moving average, which we have here, right? Okay, I'm not using a mouse pad, so my mouse is actually quite too hard to maneuver, but anyway, so firstly we need price to move below the moving average, right? So we've got that here, right? Once that first tick is done, our second tick is we need to wait for price to move or to break support or resistance. Support in a case of a downtrend, resistance in a case of an uptrend, right? But price has to always move below the moving average, and it has to break this resistance line down here, right? So it has to break the first resistance line, and then, sorry guys, I constantly have to pause this video because I'm now recording in the kitchen. Yeah, because I need to make my little one something to eat. Anyway, let's see. So where was I? Okay, so price has to move below the moving average, right? You may go ahead and write these down, but this is all, remember, based on the daily chart, right? So price has to move below moving average, right? Great stuff. So that's our first tick. These are the two things that we're going to be looking out for. These are the most important things that need to happen before you can take a position, right? Secondly, price has to break support or resistance. So price has to break support or resistance, right? So those are two ticks, right? So if you know your candlestick analysis, as I mentioned, this is going to be easy for you. It's going to be relatively easy because you will be able to tell things like, say for instance, up here you've got, you know, your tweezers here, followed by an engulfing pattern right there. So this would have been, you know, an alert to me or you who can, you know, follow or who can read candlestick patterns that we could be ready to move downwards, right? So that's what you actually wait for. You just wait for price really to break, you know, the moving average and move below it, as well as once after it's done that, it needs to break support or resistance. So it will be the same when it is an uptrend, right? You wait for it to break support first, and then you wait for it to break it's actually resistance in the case of an uptrend, and in the case of a downtrend it breaks support, right? So great stuff. So that's broken, right? So now when it breaks, just want to draw your attention to this. Let me just maximize this real quickly. So when it breaks, we can see that price breaks support at this candle here, right? So this candle formed on the 25th of April. So the 25th of April, we wait for the candle to close. We wait for it to close below the moving average. Actually, this moving average would work here as well. Yeah. Right, so this candle here, we wait for it to close, right? Once it closes, we know that the 26th, which is on this day, is the day that we're going to be looking for our sell options, right? This is the day that we're going to look for our sell options, right? Or this is the day when we're going to start selling, basically. Now, before you actually click that sell button, you need to have a target. I cannot stress the importance of a target enough. You need to have a target, right? And your target is this one here. So I'm going to make this one green. Your target is your next zone. Don't be greedy and think, you know what, I'm going to make my target the second zone or the third zone or the fourth. No, you need to always take profit where the market says you should take profit. You understand that? So your first or your closest target, your first target, is where you're going to exit, and you're going to exit all of your trades. You'll see that this strategy will actually give you quite a lot of trades, right, within a move. You see, you feel me? And that's when you need to take profit. You need to take profit at this green zone. So I'm going to start calling them zones, right? And then the second zone, I just want to mark this zone. I'm going to make this one orange. Where's my orange? Dark orange. And then I'm gonna make this one red. Red, just so that it becomes easy for me when I explain the trade, and explain the setups, right? I know we've got the last one here, so the last one here, I'm going to make this one purple. So purple it is. Ugly as purple, but yeah. Anyway, so seeing that we are going to enter here at this level, our next target is going to be at the green zone, right? And if we get signals at the green zone, our next target will be at the orange zone. When we get signals to sell at the orange zone, we're going to take profits at the red zones, and so it will go moving forward, right? Fantastic. So here we go. Now on the 26th, going back to our signal, right? On the 26th, that's when we're going to enter, or we're going to look for our entry options, or we're going to look for our entries, right? So what you need to do is, right after you've determined that, once after the 25th has formed, it's now the 26th, you go over to the 30-minute chart. Right, go over to the 30-minute chart. We need the 20, I said it is the, let me remove this, 26th, right, of April. Come on. September, August, we close. July, June, come on. May, come on. Oh my god, this is so tedious. Anyway, May, and we are in April the 26th. I'm just gonna do this here real quickly to just make it a little bit easy for us. Show period separators. Where are you? Period separators. So the 25th was on this day, right? So remember, we did nothing on the 25th. We're looking for our sell options, or we're going to only sell from the 26th moving forward, right? So the 26th, here we are here. 26th, the same principle applies. You wait for a candle that is going to break the moving average and move below the moving average, right? That's when you're going to be taking profit. Now remember, as I said, it would be great if you know your candlestick analysis, because this is where they're going to come in handy. As you can see, this is an engulfing pattern. This candle right here is an engulfing pattern, and on top of that, it closes below the moving average. So you could have taken your first trade right here. So trade to the downside. Remember, overall bias is we're going down. That was determined by the daily chart, so you will be selling right there. So that will be your first trade. Again, I need to point out something that is very important to you guys with Forex or any CFDs, guys. What goes down must come up, what goes up must come down, right? At all times. Now why I'm saying this is because we know that the market will go from ranging, I mean not from ranging, but from say a downtrend to a pause or a range, and then continue in the opposite direction, and so it will go, right? So you need to anticipate these moves, right? Why I'm mentioning this is because, as you can see from here, price would have moved against you, right? Would have moved against you, but you would have had another opportunity to actually enter the trade, right? Which is here, and this is a big shadow, basically, or an engulfing pattern, whichever one you want to call it, which is right here. That's your second trade, and it goes down below the moving average, which means you would have taken another position right down there to the downside, right? And now we're going to be looking for another candle here, or we're going to be looking for another opportunity to enter. Another opportunity to enter would have been down here, right? Price now came up, tested the moving average, but it was rejected immediately, so you could have entered right there at the close of this candle here, which is an engulfing pattern, and forward we go, right? And let me see, so that is trade number 3, right? And we're gonna still wait. You're gonna get this. This is during the Asian session, so if you were still up during the Asian session and this candle, and you so happen to come across this candle here, this also would have been a nice place to enter your trade, but I would be sleeping at this time, so adios. The next trade that you would have taken would have been this one down here. No, that's not an engulfing pattern. So let's see. I would have actually taken this one here. It's a nice engulfing pattern. Stop loss would have been up here and take it to the downside, right? Our next trade, let's just take a look. Our next trade that I'm seeing here is arrow down right here. I would have taken it right there. Yeah, and the last trade that you would have taken would have been down here. If you knew your candlestick analysis, you would have noticed that this candle here is actually the right place to actually take or enter your trade. I'm back again. Sorry about that, guys. So where was I? Yeah, if you studied your candlestick analysis quite well, you would have realized that this would have been a potential area to actually enter the trade, right? And therefore you would have taken it. Now if we go back real quick, I'll show you something, guys. If we go back and we count these arrows that I have here, we would have taken how many trades? That would be 1, 2, 3, 4, 5. We would have taken 6 trades, right? Now when we take these 6 trades, remember every single one of them's target is this green zone here. As I mentioned to you guys, there is no need to be greedy when it comes to trading, right? Sometimes this shit takes over you and you don't even know it, but there is no need for you to get greedy. Take your profits, take what the market is giving you and run, right? And that's really the name of the game, essentially. So you might be sitting there thinking, what the hell is this guy talking about? I mean, how many pips is that? That's about 250, 270 pips, a little below 270 pips. But if you count all of these trades all together and combine them, you could easily be looking at about 300 to 350 pips, all from these 6 trades. You know what I mean? So remember, take what the market is giving you. Right. So now that your trades are all out, they've all taken profit at the green zone, right? What you need to do is we go back to our daily chart and we wait for our next signal, right? We wait for our next signal. So if let me just remove these real quickly, delete all arrows. There we go. If I remove these, right, now remember we had taken profit here, right, at the zone here, right? Now if you take a look at this candle here, this candle is an inverted hammer, right? And inverted hammers are quite too powerful, really. So you would have known that the next day I need to be taking trades, right? I need to be taking trades that are going to take profit at the orange zone, which is down here, right? So you would have waited for this candle here to close, which is the hammer, and for this one here to open for us to start taking our trades, right? And on which day is this? This is the 15th of May. So this is the last example. I hope you all understand this. So the 15th, we're going to go back to the 15th of May, 30th to 9, 10, 11, 15th. So the 15th of May is right here. Did we get that signal on the 15th? Let me see. We got that signal on, where is it, my hammer? Right here. This is the 14th, right? Yeah, so we're looking for our entry. We're looking for our entries or our sells on the 15th, which is on this day here, the 15th of May. Now remember, what you want to do is you want to wait for price to break support and move below the moving average. So when this candle, or when the previous day closed, it closed below the moving average. So that takes care of one of the ticks, right? So price right now is moving below the moving average, and it's just broken, the support line, right? And it broke it nicely, quite nicely. So you could have taken this trade at the close of this candle, the big candle there, to the downside, right? And let's see, so that will be trade number 1. Let's do this. So that will be trade number 1, that will be down there. Trade number 2, let's take a look. I would have taken this trade here, candlestick analysis. Remember guys, I would have taken this candlestick here, or this candle formation here, but that's okay. Then let's take a look. We're looking for quality setups, remember that guys, right? So this candle here would have also been a nice one to actually get in on. What am I doing? This candle here, right? It is an engulfing pattern, so you would have taken this one here, stop loss of about up there, you would have been golden. That's trade number 2. Trade number 3 is at this candle here. Now something occurs here. This is also what I meant by, you know, this strategy is not bulletproof, right? I want you to take a look at this. The market goes against most of your positions right here. So this position here would have been, this position here would have been negative 2 days later, as well as these two positions in fact would have been negative, right? But because we are aware of, you know, the market bias, right, we would have left those. I would have left these with no stop losses to actually proceed or carry on, because I know that my overall bias is downtrend based on the daily chart, right? So I wouldn't have had any stop losses here. But I urge you and I say to you guys, trade with caution, right? I did that because, you know, I used to have small exposure really per trade, or risk exposure per trade. So it wouldn't help you if, say, at this trade here you're going to use, let's say, your leverage, you decide on leverage that is 2 standard lots, whereas, you know, your account cannot handle 2 standard lots. If, let's say, the trade goes against you by, say, 30 pips or 40 pips or 50 pips, you know, then only then it's going to become a problem for you, because by the time the price gets to that level here, it will take you out as soon as it gets, say, up here. You know what I mean? So you want to be very cautious. You want to practice your risk management correctly. The reason I'm not mentioning this is because, you know, every single person or every single trader needs to have their own risk management setup, if you understand what I mean. Because I can't say to you risk 2% or 1%. For all I know, you're risking 5% and it works perfectly for you, or even 10% and works perfectly for you. So keep at it, right? So that's what it is. So you need to be aware of such things. You know, pullbacks like this actually happen, because you would have entered here, pullbacks like this actually happen, and, you know, you would have been what, 31 pips negative, if you understand what I'm trying to say. And that might just cause a problem for you, you know what I mean? Margin calls and all of that shit. So you want to trade carefully and, you know, look out for your own ass, essentially. Like I said, the strategy is not bulletproof, so shit like this will happen. But like I said, overall bias is downtrend, so in most cases it will actually work out perfectly for you. In other cases, you'll have a higher leverage and, you know, your account won't be able to handle those pullbacks. You know what I mean? So moving right ahead. So this pullback happens, and once after the pullback happens, we get something like this here. This would have also been in the Asian session. So if you were up, that would have been great. You could have entered there, and every single one of your trades were going to be taking profit at this orange zone. So right there we would have had, let's see, let's tally up now. We would have had how many trades right there? Oh my gosh, did I do it? Oh yes, I did it. Now let's get rid of this purple one here. We don't need that. Yeah, we don't need that. So we had our initial trade would have been down here, so that's 1, 2, 3, 4. We could have had 4 trades, or even 5 down here if, you know, you were, or even 5 down here. I'll just show you. Candlestick analysis, guys, will work perfectly here for you. The strategy will work magnificent here for you. And we've got another candle here. which is actually a nice one. So you could have taken that trade there, and all of them would have taken profit right down here. All of them would have taken profit. Let me just remove you and maximize you. Sorry guys, we were cut off there. Most of you guys are not going to realize this, but I was cut off there. Click the wrong button. Alright, so all of your trades would have taken profit at this box here, right? And once we're out of those trades there, or once we've taken profit, we scroll down to our daily chart, and we would have been out somewhere here. Where is my box? Anyway, it's no longer, it doesn't want to show me here, so let's delete all arrows. Okay, my little box is not there, but we would have taken profit right at round about this candle here, right? And then we wait for another signal based on, you know, candlestick analysis. That's when we're going to start taking our trades again, right? So this is essentially how I used to trade, you know, trending markets when I started trending. When I started trading. And to tell you the truth, it actually did make me, it made me a lot of money when I first started. And that's when I realized, or when I knew that I have to become a trader, or I have to trade on a daily basis, or as a career. Because when I first started, I had the strategy in hand, right? So I practiced it, I did everything, and when I finally went into the live markets, man, I made so much money I could not even believe it. But I lost it all. The reason I lost it all is because I started developing a big head, if you understand what I'm trying to say. I started to feel like I'm untouchable, I'm the world's greatest trader on earth, and soon after that I scrapped this strategy, and now I went back to it donkey years later, and I realized that the strategy actually works, and it's powerful, provided that you follow the rules, provided that you stick to it, you know what I mean? And that's the reason why I'm sharing this with you guys, is because I believe in it. I've traded it, it's made me a lot of money, and it further validated the fact that I wanted to become a trader at that particular time. This strategy is the one that basically said to me, all right, bruh, this is it, you are definitely going to become a trader. But nonetheless, thanks once again guys for watching. I really appreciate it. Remember to hit that subscribe button for me. I really appreciate your help, not your help brother, but your support. But please still continue to support me. Share this video with your friends, it doesn't really matter. But yeah, please subscribe, smash that subscribe button. And in the next video I'm going to be discussing another, I wouldn't call it a strategy, but another indicator. I don't like indicators, but this indicator works. It's one of those uncanny ones, just like moving averages. They become self-fulfilling. Yeah, so I'm going to be teaching you how to correctly use them, and what to do, and how to actually implement it or use it basically. And that's the Fibonacci retracement tool, right? So our next video will be the Fibonacci retracement tool. Look out for that. Other than that guys, thanks once again for watching. I really appreciate it. Remember to subscribe. Support a nigga, support a nigga, support a nigga. Thanks again once again guys. I know I've been promising you this video for quite a long time. It's finally here. Please remember guys, follow the rules of the strategy itself. If you're not going to follow the rules, it's not going to work for you. You understand? So you need to follow the rules. You need to be on point. I cannot stress that enough. Anyway, thanks once again for watching guys. It's been good. Trader X, I'm out. Adios.